morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. We want to welcome you today. Today is March 27th, 2015. It is 9:04 a.m. Eastern Time. Before we continue, let's go to the disclaimer and then go from there. Disclaimer. Future stocks and spot currency trading have large potential rewards but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy, sell futures, stocks, or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, I know we have some new faces today. I want to welcome you for the first time to Phoenix Trading Strategies. So we'll walk you through the website real quickly. Homepage is, is a very good page. It allows you to understand basically that the game is rigged. And it has been rigged for some time until now. Now you actually have what I consider to say a fighting chance. The information that you're going to learn here today and that you're going to learn throughout the process is going to change the way you look at trading forever, and will change the way you look at forex. Now, it won't matter that the banks are front-running orders or that they're playing high-frequency games, because what you're going to learn is that decisions have been made ahead of time. And so what we do is that we show you how to blueprint the trade out hours in advance before it actually unfolds. And that gives you tremendous lead time to, one, eliminate doubt, remove fear from your decision process, and concentrate on three things: defining your entry, defining your stop loss, and more importantly, defining your take profit target. Those are the only three things that should be in your mind after we finish. So if you want to learn a little bit more about how we came up with this concept, you can take a look at our About Us page, and you'll see my journey. I started off over 10 years ago trading just like you as a retail trader. I became a licensed commodities and forex broker in 2008. I hold both Series 3 and Series 34. At this point, I am not registered with anyone, nor do I have any interest in registering with anyone. I was fortunate to be able to work with a team of developers that developed the first electronic communications network, which was an aggregator, a bridge to aggregate top 12 Tier 1 banks into one feed for the retail market. So that's where I learned how to understand the protocols that they were using to report to the broker-dealers through the aggregator, through the bridge, through the platform. And we've taken that information and created what we call currency portfolio rebalancing, which is basically our theory in regards to how they are trading. Everything is about risk with the banks, Many people don't really understand that, but it is. I take you to the blog because in the blog is where we have a lot of videos. You can go to latest trades, and we're going to update this week's trades this week. These are last week's trades, of course. Trading videos. So it makes a big difference. There's a lot of education that we provide, and we really try and help. At the end of the day, it comes down to helping you understand how to trade in this environment. This environment has changed for the worse, not for the better, but that's okay, because we've trained a lot of people now that are having great success, and hopefully we will get you to that level as well. So now that we've covered that, let's go over what we come to see, which is, are there any trading opportunities? So let's see what's in the calendar. Final GDP numbers came out, and they were not good. From the looks of it, GDP price index came in pretty much stable. We're still looking for consumer sentiment right now within the hour, and that'll create a whip. Consumer sentiment, as even though it doesn't look as an important news release or fundamental, it truly is, because it will define basically a trade. And so we look for that type of opportunity. So now that we know basically what's going on, now we can go to the charts and actually see what has been taking place. Now this trade actually took place yesterday, and I'm going to go over the indicators real briefly because I think it's very important. I've put these moving averages really to just demonstrate that I don't use them to make my decision process, but I know a lot of you do. So, and it's okay. You will eventually stop using them, just like other indicators. I never advise people stop using what works for you. No. Incorporate it into this. This will make it better, and you'll see why. All this is based on math. It's based on a zero-sum game, and I'll explain why. So, the moving averages that we have up here, this one that you see here is a 50 moving average. This one is a 200 exponential, and this one is an 800 exponential moving average. Now, our algorithms. This is really where we differentiate from everyone else, because we get you into trades before everyone else even considers getting into a trade. Now see these dots right here, these gold dots, these are power dots. This is a super algorithm that we created. And what it does a number of things. It identifies, number one, when there's high frequency trading that's going to take place. So it identifies volume, momentum buildup. It identifies the price level that has already been predefined by the banks and market makers to not breach. So in this case, if you knew for a fact that when this formed at the open at 189.45 on the pound Aussie, and that they were not going to break below this price level, would you have gone long, number one? Number two, if you knew this information ahead of time, would you have increased your position substantially to take advantage of it? The answer is yes, you would have. So this algorithm here that you see, as it plots here, it plots here. We use it in higher time frames because our decision process is based off of a 720 minute, a 480, an 8 hour, a 4 hour, a 240 minute, a 180, a 120, and a 90 minute. So when we define these price levels in the higher time frames, we just come down to the smaller time frames to reconfirm. And when they do that, fortunately for us, we get excited because we don't fear or doubt the trade. We look forward to the trade, but we look forward to the right trade. So let's say that you would have looked at this trade. I can assure you that if you would have gotten in, let's say here after the pivot formed, just in the first run, you would have looked at 97 pips. But if you would have held it, knowing that they were going to go to a specific level, and we'll get into that later, you would have walked away with 149 pips. Not bad for a simple trade. Power dots do pay for Denny's, that's for sure, John. So our secret is that we're able to identify the price levels that the banks are using for the day and for the past 2 days. We can actually pinpoint these price levels for the week on the higher time frame and then reconfirm on the smaller time frame what actually is their play. So yes, at the end of the day, it really comes down to, is information the most valuable commodity when you trade? Make no mistake. That's why we name them the power dots and we put them gold, because to us they signify exactly that. If NinjaTrader would have had a diamond for this instead of dots, believe me, I would have put a diamond because I think it would have made much more of an impact. Subliminally, and psychologically it makes an impact because it drags you in. It makes you pay attention to the most important part. And that's the most important part of our strategy and our indicator suite, is that you don't have to be in front of the computer 24/7. You don't have to be a slave to the trade. No, let them do all the work for you. That's why we created this, the Market Analyzer. Now, I have this one on a 180 right now because I didn't want to hear all the noise and nonsense. But the Market Analyzer, what this does is that it will announce to you when the power dots have formed in different time frames, and you can change it very easily. I have, close to 20 instruments here, between 20 pairs. I've got gold, I've got the E-minis, I've got the DAX. I've got pretty much all the important Forex pairs that I think are relevant. About a 14-hour trade. And what this does is that it saves my time tremendously because, normally I use 3 market analyzers, but when I'm doing a webinar, I can't because it just sucks it all dry. So let's say I go to the 30-minute on this one. You'll see that there will be more trading opportunities in the 30-minute. And that will make a difference. Because we don't trade on the 1 minute or 5 minute. No. We make our decision process, our final decision process off of a 10-minute. And it makes such a difference because we are not, even though we're scalping on an intraday level, but we're going for the sure thing. We're not going for trades that don't make any sense. See, like right now, the only one that's making sense to look at here is the US CAD. Now, you just heard that, analyze me and trade with me. Whenever the power dots form, it'll say analyze me, and it'll tell you what pair you should be looking at. So let's go to the pound yen. I like the pound yen. And then we'll take a look at the US CAD. Now, trade with me is when it's basically bouncing off of a trend stop. So again, we haven't really gone over all of the indicators, so I'm going to go over them real quickly with you. So the power dots are the most important thing. These little magenta dots, these are pivots. Very, very important, because they map out the next levels that they're going to go to as they're heading to another level of power dots. Very important. Now, you see these little plus signs right here? These are trend stops. And basically what this does, tells you that the trend is still bullish until it is broken and then reverses. So would I have normally have taken this trade? Not really. This was not a really great trade to take. Even though it announced that it was going to go short, it was just very choppy, and I probably would not have traded it, this pair myself, after seeing it. The trend dots are these dots right here where the candles are basically trading off of. Very important as well. When they transition from bullish, they'll go neutral and then they'll go bearish. So they'll transition from cayenne or turquoise to gold to finally red. And that's pretty much it on this level. The sentiment, this is a lagging indicator, and I really don't use it as a leading indicator. Some people call it a heat map. I don't. I'll tell you why. Because as a heat map, it really doesn't work. It's used on you use multiple time frames to determine the direction of a trade. The way I use it is more simplistic. If I'm in a trade and I know that it's going to go bullish, then the minute, let's say that I was in a trade and I got in here and my stop loss was here, the minute it transitioned and I was up 20 pips, then I would move my stop loss from here to break even to maybe 5 pips and let the trade unfold. That's it. That's how I use it. Very simplistic, nothing complicated. Now, our second piece of art is the volume indicator. This is the one that's going to take you to that level, to what we call the promised land, because it's going to confirm what the power dots are telling you. So let me show you. It's good. The volume that we have synthetically created, because that's what we have. We've synthetically created volume in the Forex. It shows you the real emotion behind the decision process. For instance, you see right here this candle. When the power dot formed, I want you to see the volume that they basically drove into this. 183 million of buying volume, 175 million of selling volume, a difference of 9 million. That 9,000K really should be 9M, but couldn't do it. The programmer had an issue. So it's actually 9 million. What does that mean? Well, in volume, there has to be a zero-sum game. Someone has to buy, someone has to sell. So in this case, the buyers were determined to drive price up, but the sellers did not want to fill the remaining 9 million in orders that the buyers put out there. Why? Very simple. They did not wish to trade above this price level, which is 177.20, because they knew if they did, then price action would be driven all the way up here to another level. So what they did is that they pretty much did not fill those orders because those orders were bidding above 177.19. They were bidding them above here, and they didn't want to. Thus, the next candle, look at the difference: 165 million on the buy, 187 million on the sell, difference of 21 million. Now the buyers here didn't fill that 21 million in orders because they did not want to trade further away from that 177.19 level, or 19 level. So again, we're looking at a zero-sum game. Interesting, isn't it? But illogical. Why? Because if I'm selling and I have a buyer that's willing to pay me more, the logical thing is, why not sell? I'm going to get paid more for it. Well, the illogical answer to this is that there is an imbalance in their volume here. And what is this imbalance? Is that the sellers do not wish to drive price higher than 177.20. And in order to do that, they cannot sell or match trades above that level. So what you're getting here is you're getting the depth of market per candle per time frame. You're actually seeing how the banks have counter-programmed candlesticks and how they do their high-frequency trading at these levels. Look at this candle. 195 million on the buy, 259 million on the sell, difference of 63 million. Why did this not break below 176.72? That's the logical question that everyone must ask themselves. The sellers drove all this volume, they took control, and then they could not break that price level? The answer is very simple. There were no buyers that would take those orders below that price level. They wouldn't match. So there was no zero sum at this price level. And so then the buyers came in and said, nope, we're going to take it long, which they did. They basically shoved in 254 million on the buy against 242 million on the sell, a difference of 13 million in orders that weren't filled, but it didn't matter because the buyers accomplished what they were looking to do. And at these price levels, what happens is that the banks basically communicate amongst themselves. Basically, here's a negotiation. I'm a seller. Look, I can't sell above 177.20 because it causes a loss for me. So I'm not going to take any bids above that price. You can bid all you want, because if I take any bids above that price, other algorithms will kick in and other banks will jump in on this trade and drive price up, and maybe I need to rebalance my order book on the Japanese yen before I allow this to go long. So I need to make a profit on the yen before I allow you to take this long to make a profit on the pound. That's really the conversation that's taking place. Now here at the bottom, the other conversation is, look, I will not buy any trades from you or orders below 176.73, because if I do, then it will strengthen the yen further against my portfolio and I will lose. So let's come to terms. So they come to terms. They basically help each other out. They balance their book. And then, boom, the trade kicks in. It's that simple. Really what you're seeing here is the communication between themselves. See here, they came back. Look at this. They came back to this level. Never really hit it right here. They used it as a support level, and now it's going back up again. It's not because of the moving averages. The moving averages are lagging. Look at them. They're flat. Look at all these trades that happened around these moving averages that were flat. There was no way you could have made a decision to take this trade off of moving average. Impossible. Okay, now we've got more play. So let's take a look and see. Let me see. Let's take a look at the Aussie dollar. That one's always an interesting pair. Ah, yes. See, this is on a 15-minute. Look how they're. This is not on a 30-minute. Let's go to a 30-minute because I think it's very, very important for you to understand this. Here on the 30-minute, we don't really have power dots, but doesn't mean that we didn't have them before. And there were none. So probably further down, I only have 30 days of. Oh no, I have 5 days. Good Lord, I need to add 35 days. Need to add more data. So let's see if we find something. Ah yes, price is right here. And they're trading off of this level right here, which is 77.95, which is where it's currently trading. So let's draw a line. 77.95, and this was a resistance level. And this is on the 30-minute. So normally they'll use these levels again. Oops, forgive me. And so what we do is we count on it. Drag back so you can see the real picture. So you see how they're using these power levels, these price levels where the power dots have formed? Here they traded below it, above it, below it. And right now, I guess the next question is, okay, what direction are they going to go? Well, excuse me, in this case, I'm actually going to wait for them to define with the next candle here. But now that I've drawn this line, I can actually go to the smaller time frames and say, okay, are there any power dots that are formed in the smaller time frame around this level? And if so, then do I use that information? Now, when the power dots formed here, they did go down. They went down to the congestion level. So what is it that they're setting up for? This is setting up for consumer sentiment. And so this trade, anticipate that it's going to go long to 78.35. It's trading at 77.98. No buy, hold, sell trade recommendations. But let's put it to the test. That was a little loud. Let me reduce that. So what you're going to see is that the next candle that closes, which this one will close, the next one should go long. But let's confirm that with the volume. Here's where the volume indicator comes in. So this candle right here, let's look at this. This was a bearish candle with bullish volume. Ouch. Doesn't that sound illogical? I had a conversation yesterday with a client of mine in Dubai, And he's an engineer, and believe me, engineers are the most logical individuals. They're the most structured individuals. I know this because I'm married to one myself. My wife's a biochemical engineer. And so as psychotic and chaotic as I am, my wife isn't. Very structured, very disciplined. Everything must be in order. That's how engineers are. That's how they think. And that's how they process their decisions, which is a great way. Don't get me wrong, they say opposites attract. My wife and I are opposites in that level. She's very structured, very organized, but again, she's not an outside of the box thinker. I am. So this candle right here at this price level told you that there was 141 million on the buy, 127 million on the sell. It's a bearish candle with bullish volume. So that told you right then and there that they weren't going to sell this anymore, that they were buying it. And so the next candle came in and pop goes the weasel. Look at the volume here. It dropped. 18 million on the buy, 16 million on the sell, and it basically engulfed this candle. Are you kidding me? Seriously? This one they threw the kitchen sink at? And this one they did nothing and just drove price up? I would feel awkward. I would feel disturbed seeing this. However, there is logic to it. Why? Because many times you'll see this happen and they'll go to the congestion level, which is wonderful. I can't wait. We know at least that the range is between 77.85 and 77.07. But more than likely, they'll break above 78.12. And when they do, they've got to come up here to this level, 78.34. So my entry is at 78.01. So if I'm right and they drive price up to 78.04, then I pick up 33 pips off of this trade. If I'm right, what's my risk now that I've entered here? It's right here, right below this price level. So if I'm in at 78.01 and this price level is 77.95, then maybe I want to put my stop loss here at 77.90. Because I don't really think that they're going to come down and retest that level any further. That's my risk. What's my expectation? My expectation is that they bring it up here to this level, 78.34. Can it go higher? Of course it can. It can come up. If it breaks 78.34, then the next level is 78.78. We're basing this off of consumer sentiment numbers coming out. In this case, I'm not. I'll explain why. When the power dots formed, they did announce it was going to go short, and it did. It came to the trend stop. Now now you can actually take a trade from the trend stop again to the power dots. No more power dots. It finished right here. So because it finished and no other has formed, then in this case, and they're waiting for news, they've been doing this. They've been using the news. They form power dots, they go down, and then they bounce off of the trend stop when there's an important news release coming up. And that's how they set up. And then they go long, if they're going to go long, or they go short. But in this case, they're more than likely to go long. But, we'll see it. That is what we're looking for. And the reason why they did it is because they changed their algorithm. I caught it about 2 weeks ago. And I've been showing you guys this for some time, that before an important news release, they'll form power dots, go to a trade around a very important price level, which in this case is 77.95. It'll look like they're going to break below it and they'll trade around it, but really what they're setting up is that the power dots have already made their move to the downside. They're not going to move any further. And as you can see, they pulled right back above this price level. Now, before the news, everyone would say, well, this looks like it's going to go short. All right. We'll see if it goes short, because they've changed their whole tactic. Normally, before a news event, we look at a 20-minute time frame. And that's the one thing about NinjaTrader, because it's not slow, it's the volume indicator that it just takes up a lot of data. So that's why it takes forever. See here, when they formed, they did go down. They just didn't continue to go down. That's the question you should be asking yourself. Why? Why did they not continue to trade below 77.82? What held the trade? News. They're setting up for the news. But they've been trading around this level pretty aggressively. Now, for those of you that like patterns, look at this one. This is an upside down head and shoulders. This is the shoulder, arm, shoulder, head, shoulder. The next thing, if you were thinking, is arm. That's really what should come to your mind. Doesn't come to mind, but, you know, for those of you that are looking at chart patterns, this is it. So what did they do? They finished the shoulder here, and they're getting ready for the arm to pop. Goes the weasel. Now, here they had a pivot. So yes, would I have taken this trade short? Sure. But the minute that it didn't break below this, and I saw that they held it right here because this pivot showed me, then at that point, I probably would have said, no, this isn't going to go. Now, because it's a news release, I would have waited actually for the 4th or 5th. Now, because this pivot formed on the 2nd, it was a little bit too aggressive. Normally, I like the pivots forming on the 4th or 5th power dot. And when that happens, then I know, okay, see, look at this one. This one formed on the 2nd, but then it formed here at the very end, and it never looked back. It came all the way down. So at this point, I know that 77.83 isn't going to be breached. Why? Because they've attempted it already too many times, and it hasn't gone. And we have a news release coming up. So they're setting up for it. Many would say, well, this is a continuation of that trade. Could be. But when there's a news release like that, they usually don't continue. They usually trick you into falling into that. But yes, normally we would have taken this short. Except when there's news, no. You wait. You wait for them to give you the setup. Let's go to the 10-minute. See here, they're playing this game, but they've been trading around this price level, making people think, oh, they're going to go short, they're going to go long. No, they're setting up for the news. So right now, we're just going to wait. There's a pivot right here, right here. So we'll see if this closes below or above 77.95. If it closes below, then guess what? It's got to come to 77.88. And if it doesn't come, actually 77.85 is really where it has to. And if it doesn't come there, then it's not going to. Now, would I make my decision process off of the moving average? No. The answer is no. Not in a million years would I make my decision process off of moving average. It just doesn't make any sense to do so. So you have to take all this information into account, because this is how they play. This is the information that they provide. The question is, how do you follow it? How do you analyze it? What is your goal in this case? Your goal is not to trade against them. Your goal is to trade with them, because they've already gotten the numbers. They know what the news is going to be. But let's look at another pair. You know, this one's already in play. Let's take a look at how they're trading the Euro USD. Or better yet, let's take a look at this one, the US yen, since it's blinking. We have time. Normally your lead time per trade before it actually kicks in will be half hour to 45 minutes, sometimes even 2 hours. Now, I don't care what anyone says. That is a tremendous amount of time before you actually, take a trade. Yes, it is blinking. Now, it's blinking because it's trading off of a level, and this is that was the 30 minutes, so let's go to the 30 minute. That means we're going to start to set it up. See? There's a price level right there. Now, if we're going long on the Aussie dollar, that means that the US dollar is going to weaken. This one's setting up to go short. So why would I go short if the power dots are formed here? Because this is in the middle of a range. They should have actually formed up here, but they didn't. So they're still announcing volume and momentum buildup. But take a look at this. They came up here, right below this level, right here. So if you map it out on the 30-minute, they pretty much gave you the game plan as well. Now this is not a valid support level because it was broken. So normally, we like to give it a different color and just leave it there. But see, this dot repeats itself right here. That means they're going to use it again as a resistance level. Aha! As a resistance level. So now we can go down to the smaller time frame. But before we do that, we will outline these power dots so that when we go to the smaller time frame, we can see, all right, what are they actually doing? Does it make sense for us to get involved in this trade at this particular moment? And all this information is what I teach you guys in the 3-day training course. Why? Because it's important. You need to know. Let's go to the 20-minute. Excuse me. See what they're doing there. We have a pivot here and we have a pivot here. Boy, if ever we saw confusion, this would be the moment, wouldn't it? This is a 20-minute. Did they come up? Yes, they came up when the power dots formed here, when they formed here, up, then up again, and now down. This one formed, but they broke through it. Now they're coming up here. They're using it as a resistance level. Such is the case, they came down. But they're going to play around this level because this is the range that they're going to play at. Now normally, look at this. Look at how the trend dots are coming down and the candles are trading below the trend dots. Look at how the trend stop is coming down as well. Now, granted, the moving averages here are serving as a resistance level, not really as anything else. But let's continue. Let's go down to the 15-minute. And again, we've got 15 minutes before this thing actually kicks in. Give it a second. Now, for all we know, they can basically spike when the news release comes in, spike down maybe to this level, to 118.75, and then go up. Realistically, that's all we know. Now, why would I not get in on this trade right now when it's bouncing off of this level? That was a very strong support level. Because I want to see if it comes up one more time, retest the the trend stop right here, and then comes down. So if it does come up one more time, then guess what? It's going to bounce right off of the moving averages as well. So, and because we have 15 minutes, I'm not that emotional about getting involved in a trade. But everything's already transitioned to go bearish in this case. So they're pretty much already announcing it, but let's go down to the 10-minute. See? Bouncing off this level, but again, they're going to use more likely this level as the resistance level. We've seen how they use this one, but since they broke through this one, we'll wait and see how they use it. And look, they've used it before. So you want to take a look at history, how history repeats itself as well when these levels appear. Now granted, it's been a 1-step, 2-step, and finally a 3-step, but in the 3-step, they never went any further. They pulled back. So I'm going to wait. I'm going to wait for them to come up a little bit more, and then I'll go down. As for the Aussie dollar, that one, we'll take a look and see how that one's playing. See, they're coming right back down here. I should have waited to actually get a better entry on this one, but it is what it is. Normally, I don't like to give up more than 25 pips. That's where I will actually stop the trade. But because there's news coming out, we'll see how this one plays. So I'll be right back. Okay, I'm back. So you see how it's bouncing off of 77.88 right here? You would have expected it to basically break this level. It hasn't done so. So this is where I'm holding, because I know that they're going to play off of this level and could come down to the pivot, but if they bounce off of it, which is what I'm anticipating, then at that point I've pretty much confirmed that what they're doing is that they're using the trend stop as a support level before the news announcement. And they've done it many, many times. So we're going to actually see it take place right now and see if they do that. But we're only down 11 pips, which is, 12 pips, which is really nothing. So depending on how they manipulate their volume here, this is where it's going to get really interesting. Look at this one. It has bullish volume right now. This candle, this bearish candle, has bullish volume. Very, very deceiving. So why are the buyers buying it at this price level? They're doing the same thing that they did here, and then it went long. Now this is, we've got 10 minutes right now, but this candle has bullish volume. The most illogical thing that you could ever think of is happening right here. So the next logical thing is that this next candle should go long. But usually it's either this next one or the following one that goes long. And that's how they set it up. So let's go back to the US yen and see the type of game that they're playing with that one. So if you didn't have that information, you would continue to go short. And then it would really get nasty for you, wouldn't it? Now here, for instance, let's look at the volume here, because this one's really already in the direction. See, this candle right here had bearish volume, a bullish candle with bearish volume. Wow. I mean, if that's not a sight for sore eyes, I don't know what is. This was a bullish candle with bearish volume, and then it came down. So this one's already more inclined, already to go, before the news is released. So no buy, hold, sell trade recommendations, but we'll sell it right there at 1908. Where would your stop loss be? It should be up here at 1920, 1924. That's where your stop loss should be. So we'll see. We'll let these two trades play, and we'll see if that's exactly what they're going to do. But this one's already going down before the announcement. And sometimes you'll have, some currencies that just start to roll. But look at this. It's trading below the trend dots. The trend stop is coming down in a very aggressive angle. Many people would say, well, this is a support level and they're going to bounce off of this level because they did that before and they went long. Sure they did. I agree with you 100%. But their volume is telling us something different. This candle right here was the one that saved grace because it was a bullish volume announcing bearish intent. And the next candle was bearish. So we'll see if consumer sentiment actually drives these two trades. Again, we use this level. It announced it. It's a great support level. It's right here. They used it as a support level, went long, came up, used it against the counter trend, went up again, came back down to it, went up to this level, and then came right back down. Now the question is, will they break this level? You know, it may be one of those where they spike it down and then go long again, depending on how the news is released. That's really all that can be said from that, you know, from that perspective. Can't really say more in that regard. But look at how they're testing that level, just, you know, pushing. And they know that the minute they break below that level, they're going down. But they know that everyone else is looking at it as like, oh, wow, this is going to go long from this level. So, you know, let's see. Let's see if that's exactly what happens, because at the end of the day, it really comes down to how they're manipulating the volume at those price levels. And that determines how they manipulate the trade. Now, if you were in a binary trade and you knew that this candle had bearish intent, had bearish volume, it was a bullish candle with bearish volume, the next candle would have been short. No question about it. You would have thrown the kitchen sink short at that thing. So this is where we put it to the test. And we wait and see how the market reacts to the news release. And again, your stop loss, since our entry was right here, your stop loss should be up here, 1922. That's where your stop loss should be. What's your exposure? Really not a lot, maybe 14, 15 pips. Any questions so far? There is never a wrong question. This is usually sometimes the best time to ask questions. So in between this, what I'm going to do is I'm going to type in my email. It is ricardo@phoenixtradingstrategies.com. My Skype and my telephone number, which is 818-431-1357. So if you have any questions, then you can send me an email. You can call me. I will take your information. You know what? It could be one of those long purple candles to the downside. It just might be. 3 minutes before the announcement. You know, let's see. This is where, and look at this, right before the announcement, they're already going short. So I'm curious. Number one, why are they already moving before the announcement? Unless they know something. Ooh. Now see, now they broke this level. They're right at it. If they go below it, it'll be nasty. Nasty, nasty, nasty. 2 minutes. Always, you know, if you know what they're going to do, then you can't really doubt it. Look at the information that you were given. This level right here, they broke below it, came back up, never came actually up to retest it, formed a pivot right here, came down. This one showed bearish volume, a bullish candle with bearish volume. And then this one just came down. and it broke below yesterday's level, which was right here, 119.08. Oops, that's a no-no. It's at 119 even right now, where it's currently trading. Will it go below? That's the next question. 1 minute to go, so we'll see. Excuse me. 119.27, that's the first level. And it broke below that. Yes, this was the first level that they broke. One more minute. Let's see. Oops, there it is. What are they going to do? Breaking news. Let's see what Bloomberg has to say about consumer sentiment. At 93 in March, which was lower than last month. Go figure. Didn't really do anything extravagant. Let's take a look at the Aussie US, see if that one did anything. And we will refresh. Let's see the numbers. Come on. A little bit better than expected. Revised inflation. Again, didn't break below this level. Did go up previous to the announcement. Now it's right back. Let's see what it does. Nothing. Still holding like a dead duck. Only down 2 pips on the yen. 1.5 pip on the yen, and this one is 12 pips right now. Again, no real strength on the movement. Let's take a look at that one. USD JPY. Because if that one does dive, then the Aussie dollar will recover. U.S. economy grew 2.2% in fourth quarter. Again, really no extravagant movement at this point. The fact that it came up to this level again, okay. I would have expected that with the information that came out, this thing would have spiked to the upside in favor of the dollar, and it hasn't. What does that tell you? So let's let's take a look at the volume on this candle and see where it's at. One second. Let's see the volume. Again, a bullish candle with bearish volume. Interesting. Very, very interesting. It's not done yet, but at least we know what they're doing. Yes, numbers were pre-expected, of course. See, what normally I don't like is there's not a quick response to what has happened. And normally there's usually a very quick response to the news. In this case, there isn't. Let's see if there's another level here that's bouncing off of. Well, this one here was the 30-minute. So they came right to it. If it breaks below this, then it's going to come down here. But if not, then it has to come right back up to 1950. Yeah, I hate when they do that, when they take their time to define the trade. Like I said, at this point, I want to wait how this candle see how this candle closes. Had to mute it. Okay. Nothing. Aussie dollar still down 12 pips. Why haven't they done anything else? Let's give them a second to absorb it. Because everyone trading the news right now, thinking the dollar will get strong, would have thrown the kitchen sink at this long. You know, we got a signal to go short. So we're going to wait. Let's see what they're going to do. Come on, keep going. Keep going. You got another 3 minutes. Now, this one came back a little, then nothing on the Aussie dollar. Still just holding. Oh, you're welcome. Are there any pivots around 118.82? Good question. Let's take a look at that. 118.82. Yes. This one right here, but it's at 118.88. Sorry about that. 118.92, 118.89, 118.86, 118.74, 118.76. I think it has to come down to 118.76, but me thinking and it doing are two different things. But with the news, I would have, being so great for the US dollar, I would have expected this to go through the roof, not continue to go short. So maybe they don't think it's that much of great news, and maybe they just have to drive this trade down further before they go long. There's a thought. Again, normally these trades take quite a bit of time. Better estimate for 92 after 95 for reading in February. Rising utility bills take toll on lower earners. Oops, that's not a good one. So let's take a look at the volume on this bar now that it finished. It's bullish, but it closed below this price level. Came up, pulled all the way back down. This one came up on the 30-minute, and I said if it goes below this 118.99, then it's a sell-off. So it's holding. So we'll see right now what they decide to do. Oh, this. Basically, here are your orders. Go to positions. There are your positions. Right here. Nothing. Look at that. It's just stuck. And the other one is stuck too. Now sometimes these trades take quite a bit of time to unfold, and after a news release, they can take up to a half hour before they actually kick in. They don't really want people to jump in on the trade. Patience, exactly. We say patience is a virtue. In this case, it is. Sometimes what you have to do is basically just set your stop loss or wait for it to go, to develop even further so that you can move your stop loss to a break-even point. And then at that point, walk away. Set a take profit target and just let the trade unfold. See, now it's coming down. So if it breaks that 119 level, ouch, that's going to hurt. So come on, let's put it to the test. Let's break that 119 level. Ooh, 118.99. That's the one that we were going for. Come on, let's go. Ah, there it is. I hate to be right. If that one kicked in, then miserable Aussie dollar. Look at that. It just refuses to correct itself. This one's already defined the trade, and this one just isn't kicking. So I'll watch it a little more. Yeah, 118.82 is where, I think it'll stop. So we still have quite a bit to go. But yeah, see now, I would still wait at this point to move the stop loss to break even. I'd move it from 119.22 probably to 119.11 at this point, just to really minimize risk, because there's always risk when you take a trade. And then once this goes down to 118.90, then move it to break even. Because it's important that it breaks that level. Yes, just above the pivot, correct. Here's the pivot dot right here. So you want to put it right above the pivot. Let's see that Aussie dollar trade. Miserable Australians. This one's moving along really nicely. Let's take a look at that trade, why they're so treacherous. There's a bank that just doesn't want to give it up on the Aussie. Look at that. This one should have gone long, but they traded below this level. And that makes it a little concerning. But if they don't break below 77.78, then they got to bounce right back up. So I'm going to let it test it one more time and see what it does. But I want to take a look at the volume and see how they're playing the volume here. So this one has bullish volume right now. Go figure. Treacherous. This one had bullish volume too, and it came down. So we'll see if it holds. If it holds from this level, that means it's got to come back. But this is basically 77.77 is where it's got to hold. If it goes below that, no good. So let's see. Let's see right here. This is what we call volume divergence, where basically the volume starts to go up. So this next candle, this next bar, the volume closes above the mean right here. Then we should see some bullish candles come in and drive it back up. Oops. See, it bounced off that level. Now I'm only down 16 pips. Whoopee. It's a little late on its reaction though. But I need it to come back above 77.89. Then I'll be a little bit more comfortable. If it comes back above 77.89, I would actually put another position to go long. Because sometimes they will do that. They'll play that silly game. Let's see the other one. See, this one's up 9 pips already, continuing to the downside, the US yen. But this one should have gone long. Again, this is trading. Now, granted, the power dots did say short, and it did go short. Came to this level. I was basically testing, and when the news came out, it did go long. So I wasn't wrong about that, but they came right back down for some reason. Maybe they needed to come and close some trades here, retest this level to trick people in thinking that it's going to go short, or in actuality, it looks like it's going to go long. If it comes above this level, then I know we're good. But now I'm only down 15 pips on this. One more minute. Let's see. And there it is. So yeah, now I'm a little bit more comfortable in this trade actually recovering and coming right back up. Excuse me. And there she goes. So if you wanted to get in right here, I would say this would be a good entry, because your stop loss would be very minimal. You're talking about no more than 10 pips, if that. Sure, we can take a look at that one. So you came down again, you treacherous. The volume divergence and everything, wow. Very interesting. All right, let's take a look at the US Swiss. Well, it closed below this level, so it's doing the same thing that the US yen is doing. Let's see what the next level would be. Next level is 9,600 even, and if it goes below that, it'll come to 95.29. That's a pretty big drop, but it's going to take its time. No, 95.67 should be the target. You have a pivot there. So, yeah, 95.67 is where you should anticipate that it would come down to. I wouldn't take this trade right now myself because I'm late on the entry. So at this point, I don't see the relevance, but it's going to kick. See? Look at that. And if this one's kicking, then I can just imagine what the yen is doing, or about to, and it's not doing it. Look at that. Same with the Australian, it's just holding. So no, this one looks like it's gonna move a little bit more aggressively. Once it goes below 9,600, then at that point, you should consider moving your stop to a break-even point. Let's take a look at that US JPY one more time. Look at that, holding right there, treacherous. Let's see if there's a level there. Oh, there is, right here. 118.91. That's where they're holding it. But if it breaks below that, it's got to come down. It'll scream. So normally when they've already defined the direction of the trade, you know, they'll hit a level and then they'll play around it, and it'll take, you know, another 3-4 candles before they break below that price level. So it's a matter of patience. Sometimes you just have to let the trade unfold. That's really all that I can recommend you to do at this point with some of these, is just let them play. But this one, I think I'm going to kill this one. Because it's not being nice. Yeah, look at that. Came right back down again. And again, we're at that price level that if it doesn't break below, it's got to come back up. So we'll wait and see how it plays. Now, in some instances, when you're already in a trade, you can go down to the smaller minutes. Go down to a 5 minute and see if there are power dots that are formed. Okay, 77.82 on the Aussies, also London session open price level. They are tricky. I was wondering if you plotted session open price levels as points of importance. Yes, you definitely want to plot them. No. On the contrary, it's a great question. See, the one thing I don't like about this trade right now is that the candlesticks are trading below the trend dots, and usually that's an indication of short. I was expecting that because the yen was already coming down and that the dollar was weakening, that I would see that here in the Aussie dollar, and I didn't see it. And this is where I won't let them go beyond 77.77. It's a real shame because we had such a great European session, and I'm about to give back from the 120 pips that I made, 22 pips on this trade. So let's see. It's just about to hit it. Look at that. And how many candles short? 1, 2, 3, 4, 5, 6. And they've only moved 20 pips. Let's see if it bounces back from this point. The US yen is holding as well. It's not really moving. It's having a hard time breaking that price level. So let's see. What are you planning on doing? It's obvious that you don't want to break 77.77. You've made that very clear to us, so what is it that you're going to do? Okay. Starting to bounce back up. Let's see. If it comes back up to 77.85, then I'll probably close it there. So let's see what it does from here. Let's see that US yen trade. Nothing. Look at that. It's stuck. This one's not doing much, and the other one's not doing anything at all either. So I'd say your stop loss 77.77 if you were in it. They're having a really hard time breaking it. So I'm actually going to wait and see what they do on that one. And this one just doesn't want to seem to budge below that price level. Sometimes it's time to take off what you have on the table, but the fact that it came up here, I'm curious. If it pulls back down, then that means it's got one more leg to the downside. So I'm going to wait and see how this one plays out based on this candle. I'm curious to see the volume in it very. Yeah, the Aussie definitely shows, is definitely weaker than the dollar right now. But realistically, the news wasn't that great for the dollar. It reflected very well on the U.S. yen, so you would anticipate dollar weakness across the board. You have dollar weakness with the U.S. yen, but you don't have it with the Aussie dollar. So, see, this is where sometimes you want to take a look at the volume and see, all right, what are they doing? They hardly put any volume in on this. 13 million long, 7.4 million short. Really? The sellers didn't want to fill those orders any higher than that, and that's why they stopped. So will this one reverse and come right back down is the next question. It's going to take time. These trades are going to take a little time to unfold because there really isn't a news driver to really drive them right now. See, look at that. It came up, bounced off of 77.77. Now it's at 77.82. I needed to come up above 77.87 in order to be comfortable that it is going to, rebalance to the upside. But it's not. At this point, it's just holding. And like I said, sometimes, if you get into a trade like this, and it happens, you want to cut your loss. We may recover it with the U.S. yen actually unfolding. Because the U.S. yen still has, I think the U.S. yen still has room to go down further. They're just having a really hard time going below 118.94. Excuse me. But if they break below that, then we should see them go to 118.82. That is really the target that we were looking at. But they're going to test it right now again, so we'll see. So I would tell you, keep an eye on these trades. You may be surprised, and just let them play out, let them unfold. Move your stop loss accordingly so that you don't get hit too hard, but give them room to breathe. Sometimes after news, they may take, like I said, a half hour. Sometimes they take an hour before they move the market. Yeah, exactly. A lot of work for maybe 10 pips. Yeah, see, I'm not that keen on this trade anymore. And the fact that it's not rebalancing to the upside tells me that it's got one more leg to go down, and I'm not willing to give it that leg. Sometimes it's better just cut your loss and move on. I'll offset part of the loss on this one with the yen trade. I think the yen trade will actually unfold and balance out. This one has more potential to come down. So I'm going to let this one play out. Just might actually come down to that level. Not the GDP numbers, but consumer sentiment. You're right, the low hasn't been broken on the Aussie dollar. But it hasn't been broken here either on the US yen. So it's one of those where we basically just have to wait and see how it plays. So if you guys have any questions, I'm going to put my contact information again. My email. 1 second. PhoenixTradingStrategies.com. We will be sending out an email with a copy of the video for the European session. It was a great session. All 4 trades kicked in very nicely. You know, if you held your positions, you should have walked away with over 120 pips that night. So it was a good night. Like I said, you know, the Aussie dollar here was a fluke. And the U.S. session is very tricky sometimes, you know, when you trade it. That's why I don't like to trade it too much. You know, I like to look for certain opportunities, but this one just wasn't one of them. And if you have any questions, you want to give me a call, feel free. My number is 818-431-1357. Thank you for joining us today for Phoenix Trading Strategies, and we will see you Monday morning. Have a great weekend. Take care.